Hey guys, welcome back. In today's video, we are talking about shorts asking apes for shares, the Adam Aaron moon prediction, squeezing again, and many more in this video. First, we're taking a look at this. Cost to borrow is still uptrending with price. Expect volatility to explode. A big amount. Heavily suppressed, the real cost to borrow is about to show. So we're seeing as how the price of AMC going up, and of course we faced some resistance today, and you can even see we're green for the day 2.4%. But we went to the high of 1.83 before being pushed down. Now, we are then seeing in reflection to this, the cost of borrow going up, the dark pool usage going up. It goes to show the suppression manipulation, something that we were expecting. But it doesn't stop there, because if you take a look at this, we're seeing something that, for those of you who have been here for a long time, you would have noticed this, you would have seen this in the past before, where interactive brokers are sending emails again to talk about how you can earn up to X amount by lending out your shares. And in this, what they talk about is talking about shares like AMC. So we're seeing how brokerage IBK are trying to convince AMC shareholders to lend their shares to short sellers. And this is kind of going to what we talked about here with the cost of borrow going up. It means that the demand for shares is there. So what we're seeing right now with the rejection, with the ability to not go up to a new high, despite what we've seen with AMC, isn't because people are selling, isn't because the people who bought in at $1 are taking profit, but it's because the demand for short selling is so high right now that they're suppressing AMC. And we see this from cost to borrow. We see these from these emails that interactive brokers are sending. The fact they are asking you again to lend out your shares. Now, I think this time is a good time for a reminder, which is for some brokers, they have automatically enabled lending out of your shares. Now, if you do want to lend out your shares, again, this is not my place to say anything, but if you don't, and I'm here to remind you, make sure you turn it off. And we know what happens when shares are being lent out. We know how short sellers can use one share of yours and short it 5, 6, and multiple times over. And this is why I personally am against the lending of shares, especially AMC shares, but I'm not here to tell you guys what to do. Now, another thing that I think is observed right now that I think is crazy, you can see here, someone has made a data of when Adam Aaron posted to the moon back in 2021 versus 2026. And the data is actually quite crazy. So you can see the movement of when, so the purple line being 2021 and then the blue line being 2026. And after Adam Aaron posted to the moon, you can see how the price was moving. And even back in 2021, you can see this pullback that happened, this retracement that happened is the exact same that we are seeing right now. So I am not afraid at all by this pullback of the price. I know that this is normal behavior because it doesn't stop there. So this is to the current days of 2026. If you take a look at what happened then to AMC after that, look at the movement of the price. And we are at this stage right now. And of course, after this, it's only going to go even higher. So I think that this is actually quite crazy. And I think this is something that needs to be talked about more, and people need to realize about what we are looking out for. And so again, we've seen how Adam Aaron is known for giving out hints, for giving out subtle clues, and we've seen him do this in the past before, and we see how the price has moved. We're seeing this happen again. So it's very likely that going into the future, going for the next few days, and you can see how this was stagnant for a few days, but going into the next few days, we're going to be looking at how AMC is going to have that rapid movement again if we're following historical data, and especially if we're seeing how the graph played out back in 2021. So I'm very excited for this, but I'm definitely trying to keep an eye out for this in the next few days. On top of this, what we are seeing is that plenty of block trades are showing up where people are buying, and some could say that they are unwinding, others could say that they are trying to buy as much AMC as possible. So we've been seeing a lot of big trades coming through for AMC recently. Now, to note, these trades are coming through in the dark pool. So yes, there are large orders buying large amounts of AMC at these prices that we're looking at. You can even see an order coming for 189. But the problem is that they are using dark pool. And what's likely is that if you are an institution who solely wants to go long on AMC, it would be weird for you to use the dark pool because you wouldn't want to buy in the stock and not have a positive impact on that stock. And so when you're trying to buy AMC shares, but yet you don't want it to have any impact on the price of going up, and so therefore you're doing it through the dark pool, it would mean that it's in your interest for the price to go down. So it's very likely that it is the shorts that are trying to unwind, which we talked about. Now, bear in mind, this isn't the shorts who have been trapped here for a long time. We've recently seen data of how newer lended shares, newer shorted shares are being covered. So it could be that the short sellers who opened up large positions back at the 0.93 area got burnt out heavily and they're trying to cover. And this is what we talked about as a possibility. But the ones who have created billions of synthetics, remember, they are not getting out. It's the ones who have only gone in with some big positions, but recently and have not rehypothecated any shares. You can see here with how we're seeing 71% of dark pool usage for AMC, and this was at different times. And this just goes on to talk about what we've said with how the stock is being manipulated, the stock is being suppressed, and how we are seeing big orders. Bear in mind, when we do see these big orders, they are supposed to have an impact on the price. And the reason they're not is because they are routed through the dark pool. And so this is what we are seeing right now. So when you pair it up with what we've just said, right now, today we were up to 1.83 and then it dropped to 1.71. We're still up 2.4%, but this is done throughout a series of brokers begging for shares, brokers lending out every share they have possible. This is done through a series of dark pool. This is the reason for why AMC is going down, not because people are selling, but because the institutions, the market makers are heavily suppressing AMC. What we also see here right now is that a possibility of, when we understand what's going on, the fact that Discovery is holding 32 million plus AMC shares while cost of borrow rises and brokers beg for share. So this is what we're seeing with pressure building. Now, Pentwater, what previously AMC, has obviously done with Avis or Car, and now this is something that could get the same being applied to the AMC as well. So let's deep into this. Firstly, we talked about how Avis stock first squeezed back in 2021, very much like GameStop and AMC. It ripped 722% in 41 days, then dumped 54% in 7 days. So on a smaller scale than AMC and GME is why I've always talked about Avis is short squeezing because it's also being manipulated. But the reason why it isn't short squeezing as much as AMC is because it hasn't faced the amount of synthetics AMC has. And that's why. And you can see it even in the past as well. But this isn't to say that it's obviously a bad thing. Now, what we have to realize is that when we saw the price rising, the losses growing, the margin calls was being hit, and then they pushed the price down. But now we're seeing it squeeze again. And what's more important about this was what they supposedly is saying that the Wall Street was claiming shorts has closed back in 2021 when the stock went up 722% and when it dumped 54%, they claimed that this was because they covered, so it went up 722%, and when it dumped 54%, it was because they are fully out now. There were no more short sellers, and this was done by people selling, when clearly that's not the case, because coming into 2026, we're seeing it squeezing again, and this time it's on what we can see on a similar scale, but if you take a look at what we have to understand, it is still nowhere compared to where AMC and GME is going to go. Now, another big thing, as you can see as well, is how this was mainly institutional involved. So the things that we can take away from here is that the stocks that were claimed to be heavily naked shorted back in 2021, like AMC, like Avis, and they were supposedly having to have all shorts being covered, that is not true because we see it for Car. The only reason is that Car right now has experienced more institutional investors, but secondly, it doesn't have nearly as much synthetics as AMC. But when you take that into account and you take into this fundamental into account, so I want to go heavily into this because people talk about how AMC has a 4 billion debt. And we've already seen how AMC is tackling this. We've always acknowledged the debt argument. We realize AMC has debt, and it is something that is hindering AMC, but it isn't something that is crashing AMC to the ground, especially when you see how AMC is paying off interest, AMC is restructuring debt. When you look at all of this, you know that yes, it's a problem, but it's not a problem that's causing AMC to be inefficient. What you also have to realize is that Avis has $25 billion in there. So the reason of how Avis is able to go up and have a short squeeze, despite the fact it has way more debt than AMC, should already show you what is possible for AMC. Not to mention the fact that retail apes has owned AMC 10, 15, 20, 50, 100 times over. Plus, right now, there are institutional ownership now in the mix. And it's what we talked about. When there's institutions that are involved, we are more likely to see AMC squeeze. On top of this, you can see a big reason for why we're seeing kind of the cause and why it's important. And you can see how this is essentially, this is talking about the whole Avis situation. Now, what I think is important is because of where this is getting interesting, of how options are being used. And this applies for car, which will apply for AMC, which is how Penwater sold massive deep in the money put options. And while the stock was near 96, buyer of those put had to hedge by buying the underlying stock. And so as we see more companies buy into AMC, like what we've seen with Discovery, like what we've seen with UBS, we are seeing the similar situation being played out right now as well. And this is what we've said with how when you compare, when you put everything in line together right now, when you take a look at what happened to Cobb, the fact it has $25 billion in debt, yeah, it was squeezing. The fact it was supposed to be having shorts were closed back in 2021, yet we're seeing it short squeezing again. The fact we're seeing it with the same situation, the fact we talked about Adam Aaron talking about to the moon, you can see how everything is lining up. And if you take another source, and you can see here from Stefan, who talks about even in what we see from the Swedish broker, you can see how much of the float is being bought up. And some are saying that retail buys more than 4 AMC floats per year. And this is only based on the average of 100 shares a month buy per investor on a 2 million basis. Now, I think that this is very important because this just goes to show how big the number is, because we have to remember there are people who are buying 1,000 shares a week. There are people who I've seen buying 10,000 shares in a day. There are people who have bought over 100,000 shares in a month. And so when we talk about the floats being bought many times over, we're not just talking about 1 or 2x. We're talking about 20x, 30x, 50x. And that is the reason why. And a big thing as well right now with what's going on is banks took off their swaps to de-risk, and now you're seeing the hedge funds with all their naked shorts exposed. They're looking at the margin calls on the screen right now and don't have the collaterals to cover short. It's why you're seeing a bunch of MOA stocks all moving in unison. So the stocks that were affected back in 2021, who we knew are still being shorted to this very day, you can see why they are all moving. We're seeing stocks like Avis, we're seeing stocks like Beyond Meat, we're seeing stocks like AMC and GME also going up. There's a reason for why we're all seeing them moving up right now. It's because they don't have the collaterals to do so. And if you see it here as well, what we can see is talking about the ownership, it's talking about the synthetic ownership via swaps. So if you want to take another look at how synthetic shares are being created, how this is possible, is because of swaps. And when we talk about swaps, you then know about some of the institutions, some of the banks who owns toxic swaps of AMC and GME. And so for those people who don't believe in this whole swaps, this is what you're seeing right now. And this is what they did for Avis to squeeze. And again, the situation we have for AMC is 10 times or 100 times bigger than Avis. So you can understand why I keep on going on about how we are only going to be looking at a bigger and much larger squeeze. And what we're also looking at right now is that some of the hedge funds who are shorting Avis is also shorting GME. And there's a reason for why we're seeing GME going up. It's the reason, going back to earlier, what I was saying about how other stocks are going up. Because essentially these short sellers are all the same. The ones who are shorting Avis are shorting GME. The ones who are shorting GME are shorting AMC. The ones who are shorting AMC are shorting Beyond Meat. And so when one runs and it causes a liquidity pressure, it causes a stress in their capital, in their margin, they then don't have the ability to suppress other stocks. Is why you're seeing all of these other stocks going up. And you can understand how it's going to lead into that domino effect of every stock squeezing. We're also looking at how the technicals is leading up to a very, very crucial time for GME as well, showing how we could be looking at something major that is happening. The 2 times it has happened, firstly, we had Jan 2021, and then we had May 2024. So these are all 2 very big things, which could then lead to the third thing. And then on top of everything, on top of all of the naked shorts that we were just talking about, we now have the alleged how President Trump is looking to ban and prohibit naked short selling. So this is something that would be major if it's going to happen, if it were to be true and to actually be implemented. And that would really be the cherry on top of everything that we have just talked about. There's a big reason for why they're doing this. Firstly, what we talked about, how they have to release the MMTLP trading records with the 25 million trade. So this is the first step. And this was because we knew MMTLP were a victim of naked short selling. And so people are saying that the price can run to $5,000 to even $10,000 per share, which is obviously going to be insane. But then it doesn't stop there, because when we see Quantum Biopharma, another stock that was in a lawsuit talking about market manipulation, you can see federal court says spoofing and market manipulation claims are strong enough to proceed. Another proof, another understanding of the manipulation that is going on. So when we talk about the action for naked short selling, like I said, it feels like something is about to happen because we're suddenly seeing so many stocks get the justice that they deserve. And then on top of this, Barclays have been charged with affecting short sales without locating shares available to borrow, also known as naked short selling. So another news on top of this, another naked short seller being punished. Now, this isn't something major in terms of the punishment, but the fact that we are now seeing actions being taken towards this makes me feel optimistic that they are going to indeed take action towards naked short selling. And now when we take a look at AMC amidst all of this, you can see why they're trying to then call out on AMC, why they're trying to put AMC in a bad place and put AMC down, because they realize that the time is coming for them. They realize that AMC is about to take over. And when we take a look at the box office, not just in the US, but South America and Brazil, you can see how well it's doing as well. And this is what we've said. AMC is going to take over in so many different areas. As always, this is Financial Advice, and I'll catch you guys next time.